Welcome, everybody. Thank you for joining us here on The Father Show. And I'm your host, Mike Thompson. Today, we got a great show for you. We're going to have Kevin Guttman coming on the show today to really teach us about reverse mortgages, something that I know very little to nothing about. And I know for some of you younger audience guests, you're going to be saying, well, I don't need to know anything about that. But your mother or your father might need to know about it. And for you to be educated on it is good as well because you can help them. But before we get to that, if you have not subscribed to the show, please subscribe to the show and hit that notification bell so that way anytime we put up a new show, you'll be notified of such. And if you are a man and you are looking for resources that can help you in a situation that you may be in, maybe it's an attorney, maybe it's counseling, maybe it's therapy, just something that you need additional information about, go to the Father Show with MikeThompson.com. Click on resources, and there you can find resources that help you to be the best man that you can be. And that's all we really want you to do here. All right. So thank you. And without further ado, I really want to get into this subject because I know very little about it and I'm looking forward to learning about it. And we're going to be having more people. And matter of fact, Kevin is going to come back and talk about mortgages as well, because I've had men to come up and say, hey, I want to buy a house, but I'm not quite sure how to go about it. So we're going to have mortgage people to come on the show so that you can have a good idea of what you're looking for, what you need to do. And they're going to be from different parts of the country so that way, you can get a better idea, because one state might do it different than another state. So we're going to get all that information as fast as we can. But without further ado, I'd like to welcome Kevin Guttman. Kevin, how you doing, man?
Hey, Mike. Good to see you. Thanks for having me today.
Yeah, it's good to have you on the show, and I really thank you for coming on the show and being a part of the show. It's fantastic, and like I said, it's something that I've been wanting to do because I've had a lot of men ask me about mortgages. And for you and I, today we're going to talk about reverse mortgages and trying to get a clear understanding of that. So, but before we get into that, why don't you tell the audience a little bit about yourself?
Sure. My wife Sabrina and I have been married 33 years. We live in Colorado. We have 5 grown children, 3 grandchildren, and I've been in the mortgage industry since 2004. And outside of work, I like to read and travel, and I like sports. I'm a big Laker fan, and originally from Southern California. And I've been leading the men's group. You talk about the Father Show. I've been leading the men's group for 15 years, trying to just help men live their best life and follow God and honor God with everything they do. Yeah, that's a little summary anyway.
Hmm. Well, that's good. I didn't know you did the men's group. That's fantastic.
Yeah.
Okay. Well, I see a third show in the making. So, I'd love to hear what you have learned and what you have done with helping men living the best life that they can and understanding what masculinity and malehood is all about.
Yeah. Well, the one thing I will say just right now is we're a lot better if we go through life together with other men versus going it alone. And so many guys try to go it alone, and it's just a tough road, man.
It is. And you do find a lot of men trying to go it alone because one, they don't want to feel or seem weak. And I'm sure you know this already, but they don't want to feel or seem weak. They sometimes think they're the only one going through it. So they want to just, keep it to themselves because nobody else is going through what I'm going through. So, I can't share it with anybody because they're not going to understand. and then I'm going to look weak, and then I'm going to look like a crybaby. And society has taught me we cannot look like crybabies, and we got to be strong, and we have to be this, and we have to be that. But that's not making us the best version of ourselves when we do that.
Agreed.
Yeah. So, like I said, that's the third show. So
I'd
tell
love
me.
to do that.
All right, so we're gonna do it. We're definitely going to do it because I would love to be able to talk about it more, and then I love having men on the show to talk about their life struggles, and we all are going to go through some. If you haven't already, say you may be young and life has been peachy king and dandy. No, those struggles are coming. So it's great to learn from people like yourself and that have gone through some things and can really talk you through it and let you know that, hey, this is how you can handle that in the best way.
Yeah.
So let's get into reverse mortgages. I don't know much about reverse mortgages. I've heard of it. I've heard it talked about, but I don't really know a lot about it. So, what is reverse mortgage?
Yeah. Well, it could be the ideal mortgage that somebody could have in retirement. The program's been around since 1961. There was a
Okay.
widow that couldn't afford to stay in her home. She was in Maine. She knew a local banker because he played football for her husband, who was the football coach. She had a lot of equity in her house, and the banker went to his bank and said, "What if we let this lady stay in her house, not make a mortgage payment, but the payments will come from her equity?" And that's what happened. And then for 27 years, it was kind of the Wild West before the government started overseeing them and regulating them. In the 1988, President Reagan and Congress passed a bill, 10-year trial bill, to see if a reverse mortgage would help a senior remain in their home, maintain their independence. At the time, they had to sign over the title to their house, but it hasn't been that way for 30 years. People still think that's the case, but it's not.
Okay.
And so they can remain in their home, maintain their independence, retain ownership on title, gain access to their equity, and then there's no payment required. So it just really helps a senior not outlive their money.
So, if you have, say, 250,000 in equity in your home, you can now tap into that and use that as part of your retirement fund. Is that what I'm hearing?
Yeah, so there's really three main ways that people use a reverse mortgage, Mike. The first is to finance a home. So what I tell people is I say, look, you can increase your buying power, double your purchasing power, live in a house that better suits you in this stage of life. Maybe the house they live in now, they can't do the stairs or they don't want to shovel the snow anymore or maintain it. They can move to a house that better suits them in this stage of life. Not have to use all their money. They put 50 to 60% down depending upon their age. No mortgage payment required. That's the first way, finance a home. Second way is like you just described. Maybe they have a lot of equity. Most Americans, by the way, have most of their net worth tied up in their home equity.
Mm-hmm.
The problem is you can't get to it. There's only three ways you can get to your equity: sell your house,
Mm-hmm.
pay the realtor fee, live somewhere, do a cash out refi or a home equity line of credit, have a payment, or do a reverse mortgage. When people do a reverse mortgage, it unlocks their equity. They gain access to those funds three ways: lump sum, monthly payments, or a line of credit. That line of credit earns interest, compound interest in their favor. And when they draw the money, it's not taxable.
So they,
So it's really,
I'm sorry, but so they grow
oh, go ahead.
interest on the money that they are given?
Yeah. So think about it this way. Right now, most people's equity earns zero,
Right,
right?
right.
When you get a reverse mortgage, today it would be you'd earn about 2.5% on about 50% of your equity. And if we have another market correction like we did in 2008 and 9, that part of your equity is protected. It can't be cut, it can't be diminished. So it's really like equity insurance. You're protecting 50% of your equity from a market correction.
Mm-hmm. So how long would you have to own your home, or is this something just for seniors, or is it something that even somebody that bought their home, say, in their 20s and now they're in their 40s or their 30s and they want to retire?
Yeah. Anybody 62 years or older, at least one borrower needs to be 62. They can take advantage of the program. Needs to be their primary home. The responsibilities the borrower has is to maintain the home, pay the property taxes, homeowners insurance, and as long as they do that, they can live there until age 150. In other words, they can't outlive it.
Wow.
Yeah,
Is that because the equity of the house continues to grow?
that's true. So there's two things. They get growth on their equity, the line of credit, but they also get the appreciation. Of course, nobody realizes appreciation until you sell or refinance your home. But on average, properties have appreciated 4% a year since 1961.
Hmm. If there is a another mortgage correction, market correction, like there, some people are predicting, so that money that you have, it can't be touched, or that program that you got into can't be touched at all, so it's not going to be affected by it.
Correct. Yeah. So, back in 2008 and 9, people lost 15 to 20% of their equity.
Hmm.
We would get a call a week, somebody that had a home equity line of credit. Hey, my bank or my credit union just called and they're demanding full payment on the line of credit. Can they do that? Yes, there's a demand feature in a HELOC. Or they just cut my HELOC, or they just froze my HELOC. None of that stuff can happen with a reverse mortgage.
Hmm. So this is a pretty good deal for a senior, or, and you said they have to be what, 65?
62.
62. Okay.
So it's a good deal if they plan to stay in their home for at least 18 months or more.
Mm-hmm.
If they realize there will be less equity at the end for their heirs, because a payment's being made not by the borrower, it's being made from the equity in the house,
Mm-hmm.
which means there's going to be less equity at the end. It's a good deal if they realize that this is the house they want to live in. And I always ask people, I said, how long do you think you're going to live in your home? And they almost always say they're going to carry me out, or I'm going to die here, or whatever.
Mm-hmm.
So if this is the home that you really want to stay in, this should be your last loan. This should be the last loan that you get.
Okay. Now with that.
So here's something interesting. Other countries had this program before we did. Canada, the UK, Australia, Korea, Japan, Indonesia. Lots of countries have a version of a reverse mortgage. In 2004, AARP did a survey of people with a reverse mortgage, found that 94% were satisfied or very satisfied. And over 1.2 million people have taken advantage of a reverse mortgage.
Hmm. Because I know when it first came out, like you said, it was some questions, and but I think you mentioned it earlier that you still you still own the title to the home. So once you get, say, your parents live in the house, and they died there and they had to carry them out. So anybody, the heirs, do they have to buy it again, or how does
Yeah,
that work?
yeah. So one nice thing about a reverse mortgage is that it's a non-recourse loan. What that means is the only recourse the lender has is against the property, not against the borrowers, not against the heirs, not against the estate. So, worst case scenario, if the property ends up underwater, in other words, they owe more than the house is worth, the only recourse the lender has is against the house. So that protects the heirs and their estate and the borrower, that they're never going to owe more than the house is worth. Because at the end, when the last borrower moves out, the heirs have some options. They can refinance, pay off the loan, keep it as a rental property, keep it as a home they want to move into. They can sell it, pay off the mortgage balance, whatever's left goes to the estate, goes to the heirs. If the property's over leveraged, they can buy it at 95% of the appraised value. So for example, a $300,000 house, the balance owed is $325,000. The heirs can buy it for $285,000. The difference is made up by the mortgage insurance that comes with the loan. So it's really a protection for the lender, and it's a protection for the borrower as well.
But that would mean that the mortgage insurance you're always going to pay.
Yeah, 95% of these loans are FHA backed, and FHA loans have mortgage insurance.
Mm-hmm.
And that's what protects the FHA, that they're going to get their money, but that's also what protects the heirs and the borrower and the estate, that they won't get stuck with the bill at the end.
Now, are there any fees that associated with reverse mortgage?
Yeah, good question. There's your normal loan fees that are on every loan: title, credit report, appraisal, closing fee, etc. And then there's origination fee, which is set by the government between $2,500 to $6,000 based on the value of the home. And usually those are rolled into the cost of the loan. Somebody normally doesn't have to pay for those.
Mm-hmm.
There's two things they do need to pay for up front. There's third-party mandatory counseling they have to do. That's $125 to $195. There's different companies that offer that. It's
So
one
they
of the
have to do
safeguards.
counseling?
Yeah, phone counseling appointment. Yeah, it's mandatory.
Okay. What does that
It's one of the
entail?
safeguards they've put in.
What does that entail? Teaching them about reverse mortgage?
They want to make sure that the senior understands that they're not making a payment, but payments are being made from their equity. They want to be sure that they're not being taken advantage of. They want to be sure that they have the mental capacity to make this decision, that they're alert and aware, and they're not suffering from any mental illness or dementia or anything like that.
Yeah.
And then the other thing they have to pay for is the appraisal up front. Those are the only two things they pay for up front. Everything else, most of the time, is rolled into the cost of the loan.
Okay. Not
And the
bad.
other thing to know, people always want to know, how can I use the proceeds? You can use the proceeds any way you want. You can pay off debt. You can update your house. You can buy a car. You can take a trip. You can do anything you want except purchase an annuity. That's the only thing you can't do, because in effect, you're annuitizing your equity anyway.
Mm-hmm.
You're turning your equity into illiquid to liquid, right? It's locked up. You're unlocking it. You have access to it. So that's the only thing they don't want you to do, is buy an annuity.
Okay. That kind of makes sense. Now, what is the difference between a reverse mortgage and a home equity loan?
Good question. A home equity loan has a payment, a reverse mortgage doesn't. Home equity loan is a 10 or 15-year draw, and a reverse mortgage, as I said, lasts to age 150. Home equity line doesn't earn interest for you. A reverse mortgage does earn interest for you. Home equity loan can be cut, frozen, payment demanded, full payment demanded. None of that can happen with a reverse mortgage. So we're in baseball season right now with the playoffs. And I say it's kind of like Little League and Major Leagues. A HELOC is like Little League. A reverse mortgage line of credit is like Major Leagues. It's far, far superior to a home equity line of credit.
Are there any tax benefits?
Most people these days don't itemize anymore because of the standard deduction being raised from the tax changes in 2018. So you can't write off interest anymore because you're not making a payment.
Mm-hmm.
But when you draw on the equity, it's not taxable.
Okay, so that was going to be my next question. The money that you're earning on it at 1 or 2%, that's not taxable.
Correct.
No, that's not bad.
Loans aren't taxed. It's a loan, and they can't tax loans, at least not yet.
Don't give him any ideas now. So
Old
what
uncle,
is?
he's always trying to get in your pocket, I'll tell you what.
Well, yeah. I mean, I think I don't know if you read. I'm sure you did about now the government wants to look at your bank account even more closer to see anything transferring over $600 or something crazy.
Yeah,
That's
scary.
yeah, yeah. What is the downfall of a reverse mortgage, if any?
So if somebody's going to move in 18 months or less, it probably doesn't make sense. They may not recoup the cost of the loan. If somebody's concerned about leaving less equity to their heirs, there's going to be less equity. If somebody maybe hasn't managed their resources very well, and now we give them access to tens or hundreds of thousands of dollars, it's kind of like the lottery. Those people who win the lottery, a lot of them end up worse off a couple years after they won the
Mm-hmm.
lotto than before. So, we try to protect people and not put them in a worse situation. So those are things we talk about with people just to make sure they're I so I tell sometimes I work with widows and I'll tease them and I'll say, look, you're not going to go gamble all this money away up at the casino, are you? Oh, no, I don't gamble. I say, well, good. You got to protect this money. You got to treat this money like it's kind of a rainy day fund, right? It's money set aside that if you ever need it, you can access it.
Mm-hmm.
So we just try to coach people and make sure that they're going to be responsible and not be hurt by it.
Would this be something that a senior should sit down with their heirs and talk about, or let them know what's going on?
Yeah, they can. I always ask people, are there other people you want involved in this decision? Children or advisors? And some people want to do that and some people don't. But we always make it available to people if they want to involve other decision makers. Yeah.
Now, is this national? And I know the reverse mortgage is national, but does it change from the rules change from different state?
With the reverse mortgage, it's a national program. So the loan limit, the value is up to 822,375 for an FHA backed mortgage. If we do a jumbo, we have lenders that will do that too because we're a broker. We have access to all the lenders. We can
Mm-hmm.
go up to 10 million in value. And then depending upon their age of the youngest borrower, they can borrow between 40 to 50% of that.
Hmm. Yeah, that's not as bad as I thought. Because I know when it first, I'm like you, when it first came out, and well, I won't say that because in 1961, I wasn't old enough to be buying a house. But I remember in the 80s and the 90s, they were really coming out and talking about reverse mortgages. And the problem that I thought was that you would lose your title to your home. And that was to me the drawback that I could, see. And I didn't try to dive into it, but that's what I was thinking.
So over the years, they've really improved the program. Specifically in 2015, they made it much safer for people. But the issue with the title, a lot of people think that, but that was resolved years ago. But somehow people still think that's how it works. But you keep ownership on title the whole time.
Okay. I think that's really important. And I'm glad that they came in and made that change because that was one of the things that I didn't like about the little bit that I knew about reverse mortgage was that it sounded like you would lose your title of the home. It would go back to the bank.
Yeah, another change they made in 2015. It's called non-borrowing spouse. So if a husband and wife had a reverse mortgage, and we'll say the wife in this case wasn't old enough at the time when they took it out,
Mm-hmm.
prior to 2015, if the husband moved out, the wife would also have to move out of the house. Well, that's silly. they fixed that. That's no longer the case. The other thing they did in 2015 is they passed something called financial assessment because some seniors weren't able to pay their property taxes and they were losing their house. And what financial assessment does, now we have to prove that the senior borrower has enough money to maintain the home, pay their property taxes, homeowners insurance, etc. So the foreclosure rate has gone way down as a result of them passing that in 2015. So like I say, they've made it better and safer for people.
And that was one of the thought that I had is, we've seen seniors get divorced. How does that affect their reverse mortgage?
It's true. One of the fastest growing segments in our country is silver divorce. Um, People have been married 25, 30 years getting divorced. So what may be able to happen is if somebody owns their house free and clear, we'll say it's worth 300,000. One borrower can keep the house. The other borrower can take out half the equity, give it to the spouse that wants to move somewhere else. That spouse can then buy a house, finance it with a reverse mortgage. Neither party would have a payment at that point. They both
Wow.
would have a house, no payment.
Wow. That's not bad. Now, are you licensed just in Colorado, or are you, you can deal with nationwide uh, customers?
I'm licensed in Colorado, but I have friends all over the country, so I can help somebody find somebody if they need help.
Okay. All right. Well,
The other
oh,
thing that's interesting,
hmm,
do I have just 1 minute to share this?
absolutely.
Okay. There's 500,000 people in the country that originate mortgages. There's 5,000 that do reverse mortgages, so 1%. Of those, there's 176 that have passed a rigorous test, have been in the industry long enough, abide by a code of ethics, and those are called certified reverse mortgage professionals. There's 176. And there's four that live in Colorado and then one in southern Colorado. So when I work with people, I'm mindful that, I really want to do the right thing for them and take care of them and make sure that we're helping them and not hurting them. So
Yeah.
that CRMP designation is part of that.
Yeah, because it's one of the things, and I've done refinance before. I worked for a guy and was doing refinance, and it was important to me because I didn't want to make, to do the right thing because I didn't want to screw up somebody, home and their payments and all that because that's important. So I know it's very important for somebody to find a good realtor and like you, somebody that does reverse mortgage, really know what they're doing and can really give them the best bang for their dollar. So I want you to tell the audience, how they can get in touch with you and your company and what you provide and, excuse me, the service that you provide.
Sure. So when we first meet somebody, it's always just information consultation. We don't charge just to meet people and share advice. But I have a website, reversemortgagerevolution.com. It's got a lot of videos and articles and calculator and different things people can look at there, reversemortgagerevolution.com. People can call me. I've got a toll free number, 877-251-9709. Or if they're in Colorado, they can use my local number, 719-302-5820.
Okay. And how long you been living in Colorado Springs?
We moved to Colorado from California in 96 and Denver initially. I moved there for a job. And then late 97, we moved down to the Springs. And so, what is that, 20? I do math, 24 years?
Hmm. Yeah. I always like Colorado Springs. Actually, when we first moved to Denver, my dad was stationed at Fort Carson in Colorado
Yeah,
Springs. So
yeah.
that's how we got there. And unfortunately, he passed away. And for whatever reason, my mom, he was transferred down to Fitzsimmons, down in Denver, Fitzsimmons Hospital.
Right.
And for whatever reason, my mom decided to stay in Colorado. I don't know why, but that's where we end up growing up at.
Yeah, it's a great place to live.
It's a great place to raise kids, absolutely. Great place to live. I really enjoyed it, and I do miss it, but I get back as often as I possibly can. Damn. Well, good. Well, Kevin, thank you so much for joining us on the show, and thank you for so much for bringing that information about reverse mortgage because it's really, I didn't know anything about it. I've learned quite a bit today, and it sounds like a great program. I'm old enough, but not yet ready to do that. But I really will hope that we can get a lot of people to understand what reverse mortgage is. And now, and you're going to come back on the show, right, and talk about mortgages and how to buy a
Yeah, we'll talk
house.
about regular mortgages.
Yeah.
Yeah, I've got a website called HeroMortgageLoan.com where we give some credits or some assistance to heroes,
Okay.
and we give back to charity and stuff. So we'll talk about that next time.
Okay. Sounds great. Well, Kevin, thank you so much for joining us here on the show. And I look forward to having you back on the show again more than once. I think we got two of them set up. Well, ladies and gentlemen, that is our show for today. And I really want to thank Kevin Guttman for coming on the show and providing that information about reverse mortgage, something that I really didn't know anything about. I heard about it, but didn't really know the facts about it. And that's why I wanted him to come on the show to let you know the facts about it and how you can get some more information about it as well. So his information, you'll be able to replay the show and it'll be up on the screen so you can get his information and get in touch with him. So if you're interested in doing a reverse mortgage, please give Kevin Guttman a call. And even if you're not in his state, I'm sure he can turn you on to the person that's in your state that can give you a helping hand. But if you have not subscribed to the show yet, please subscribe to the show and hit that notification bell and so we can let you know whenever we have a new show that's coming up. And also, don't forget to tell somebody else. Don't keep this a secret now. Let others know that the Father Show is here, and we really are here so that you can be the best version of yourself that you possibly can. That's all we want. That's what it's all about. And I want our men to be the best men that we can possibly be. So until next week, I want to say thank you for joining us again. And I look forward to seeing you then. God bless you and have a great week.